This is Jeff Scott, and this is my top-down review for October 2nd, 2016. It's approximately 10 a.m., so obviously there are no futures yet to discuss. I've entitled today, Should I Buy or Should I Sell? Sort of thinking back to the Clash song, or Should I Come or Should I Go? And I think it's really a legitimate question. I mean, you're going to probably end up this review with a feeling that I'm biased to the long side, which I am for a number of reasons. But I think like every other person who talks in the marketplace about the market, I think everybody, myself included, expect us to have another leg down, and maybe a pretty sharp one with all the craziness in the economic and political environment. But as we sit right now, I'm not ready to make that call. So let's talk about, should I buy or should I sell? Disclaimer, this for education purposes only, and recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm not affiliated with any software vendor or trading company. Tools demonstrated those that I use in my daily trading. I have paid for all the tools I demonstrate. Trading involves risks. You and you alone are solely responsible for any investment decisions you make. Should I identify patterns that I like or stocks that I like? That is for educational reasons only. We all have different trading tolerances, styles, and accounts, so what works for me may not work for you. As always, I like to call out those that I've learned so much from, and it's really a marriage of two philosophies. It's CanSlim, taught by O'Neill, improved by Morales and Katcher, made electronic, and brought to the 21st century by Ian Woodward and Ron Brown. That's the basis of my education and my understanding. George Lee is a great trader that I've had the honor of sharing podiums with and became friends with. Van Tharp's Position Size and Money Management. And then this is John Person, who's really about actually making trades. He's a friend now, but I've known him as a software developer, an educator, a trader, a mentor. Great books I've highlighted here. And John's all about how to trade, and he has some great signals which I incorporate, which, as I tell him, the good news about his stuff is it hasn't changed since I've known him, and I was first a customer 10 years ago in 2007. I own a lot of programs. I don't need a lot of programs. I've highlighted some of the things that I have to have. I need TradeStation or Thinkorswim. Frankly, like many people, I do most of my analysis in TradeStation because it's got such a robust platform and a stable of third-party developers. Although I do some of my trading in TradeStation, I do most of my trading in Thinkorswim. And I sort of joke with people, but it's no joke. My favorite instrument for entering trades is my iPhone. I think that their app is amazing. From an analytic perspective, HGSI and EdgeRater, as you'll see a lot of today. I do believe in seasonality. No comments about them today, and I do use a number of websites. Speaking of websites, again, I do not get commissions if you buy something. It's your business, not my business. But I do call out things that I like, and why would I do that if I don't make money? Because it keeps the people in business, and I benefit by using their software. HighGrowthStock.com, free 30-day trial. If you go under investing strategies, you'll see a bunch of my old webinars, as well as Ron Brown and others. So I always have to ask myself, where are we on this pattern when I look at the market, when I look at an index group, when I look at my stock? And this is fractal. You'll see this pattern over and over again in different time frames. We've been living in this uncertain stage for forever, it seems like. And whenever I think the market's going to go down, we get another leg up. That's just the nature of this market we've been in. We went from a prolonged period, longest ever, without a 1% movement. And then we go for a week where it's up, down, 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 about 1% every day. So in a different direction. So it's been a challenging market for many reasons. Remember, your approach has to change with the cycle. And I am pointed long right now. I do have some protection on. I've got smaller positions, and I've raised some cash. I'm going to hold this for a second and go restart my TradeStation, which is not happy today, which is one of the problems with TradeStation. All right, we're back. I just restarted TradeStation, and to be careful, I used a lot less resources. So as I said, I think we keep living in this uncertainty. Every time I think we're entering a sell time, it pops up. Even look at oil. Oil looked like it was dead on the mat beginning of the week. And then all of a sudden OPEC comes up with an agreement to have an agreement, but yet there's no agreement and oil rallies massively. So very news driven and a lot of whipsawing. If you look at Friday, you should have made money on Friday unless, of course, you had big positions in utilities. And if you do, you probably don't listen to me. I mean, wind blew up. That was sort of a high-profile blow-up. REITs were weak. Utilities were weak. But pretty much there was strength throughout the rest of the market. Gold weak as well. Oil on a tear ever since OPEC had their agreement to make an agreement. That'll be interesting to see. Major markets, I said it whipsaw, so let's look down. Friday, Thursday, Wednesday, Tuesday, Monday. So Monday we had a big down day with a PPS sell signal came in on the S&P. And then Tuesday we had sort of an inside day, an up day, but closed within the body of Monday. And then Wednesday, we had a really big up day right up to that 50-day moving average, which has become resistance. And then Thursday, we sold off hard. Friday, we tried to get above that 50, and we closed below it. So a really up and down week. So if you felt like you're on a roller coaster, no surprise. And if we look back, so the E-minis are below the 50, above the 17. The NQs, similar type of a week, sitting above the 50, certainly the strongest so far. The YMs are below the 50 consistently, again, failed at the 50, which is called an ISO failure. The TFs, the Russells, like the NASDAQs, are sitting on top of their 50, although in a daily PPS sell, as is the YM. Right now, the only one not in a daily sell is the NASDAQ, and also, we had a daily buy come in on Wednesday on the E-minis, at least on Thinkorswim. The the VIX continues to struggle. It moves up for a day and then it comes right back down. But this sort of looks kind of like the stock indices, an up and down, choppy period of time. And then the dollar struggles, fails to get above its 200-day. On the weekly, just to give you a sense of how far of a move we've had, you could see we're really at the end of a fairly robust long-term uptrend on all the major indices and well above the 200-week and the 50-week moving averages. However, we're on a sell, a new buy, a sell, and a sell on the major indexes, and the dollar is struggling to get against the 50-weekly on a weekly sell. And Genesis is just a way for me to layer up a daily, weekly, and monthly horizontally and then vertically. E-minis, NASDAQs. Oh, this is supposed to be TFs. I got to fix that. NYSE and YM. But basically, you could see that on the weeklies, and remember, I forgot the TFs for you. We're still in some sell signals on the weekly, although the NASDAQ does look like it came in with a buy signal last week. Monthly uptrends. Interest rates, they continue to slowly meander higher off of a remarkable low. Raising rates will be good for banks, especially regional banks and insurers. We've come off the low. We're still low rates. AD lines in white, Russell 2000 on the left, Russell 1000 on the right. The S&P or spiders in yellow, and you could see rates continue to go high and lead price on the AD line, leading price, which is a bullish thing. Breadth improves with the market. You can see the number of stocks above the 200 SMA and the number of stocks percentage-wise above the 40-day SMA. Both increased this week. Both are in the middle of their channel. Like many of the things that I use, they're more meaningful at extremes than they are in the middle. Speaking of extremes, this is perhaps the most accurate of all the things. This is a 3-month new high, new low ratio. And whenever we touch the bottom, we have a massive rebound. Whenever we touch the top, we correct, and we are getting closer to the top. We're at 87% of the new high, new lows are new highs over the last 13 weeks. Daily McClellan, again, extremes, price sideways. See the oscillator is slightly positive. The summation index is slightly negative. Note, at reversals, we get down to minus 4,000. We're at minus 867. So really nothing on the daily. And on the weekly, again, one can see, make sure this is weekly and that one was daily. Yep. One can see we're sort of in the middle of the range. So, without being at extremes, not too much help here either. Buckets, again, showing we're in the middle. We flipped from 55 up to 60% of the S&P 1500 above the midline of the Bollinger Bands. A little bit more shift to the right as far as percent of the buckets, but not at an extreme either way. There are no HINDYs on either the NYSE or the Russell 3000. We are in chop zone again. I had hoped that this series of kahunas and the initial hint of green markets, looking at the third setting in here, which is the Woody indicator for buy-sell, but we're back in chop. The problem with chop is it's hard to make money long or short, and you've got to be very nimble. You want to be long, you want periods of green like this. If you want to be short, you want some robust periods of red. Now, you could also look at the various sectors and industry groups, and you can find there are periods of time where everything is working, and then periods of time like right now where you've got some strength seen in the materials on the XLP, XLE energy, and XLI, which is industrials. So you can get a sense of what's working in the market using the same assessment, applying them to sectors. Canaries in the coal mine, I did drop LinkedIn because it's being taken over. And after much thoughts, I brought Baidu in. I thought about Intuitive Surgical. But right now, Baidu's been a leader as well, although it's pulled back of late. And I thought it'd be a fair replacement for LinkedIn. What's interesting, even with a new index calculation, we have taken out our old highs on the Canary. So as long as the Canaries are holding up, that's a reason for me to remain somewhat bullish. Now, this is a visual trader. It's a program that I have that I play with, and I use it for this picture. And I think this is just remarkable as it shows you sector performance of where weakness was, and then you can dive down within the various sectors to see. So I watch this every day. I turn it on usually about 10 o'clock in the morning to get a sense of what's working and what's not working. The height of the bar is the percent movement, and each one of these cylinders actually represents a unique stock, while each one of these discs, this is electric utilities, this is diversified utilities, this is gas utilities, each one of these discs represents an industry group, and every stock in the S&P 500 is represented here. Know your news and earnings. Of course, first Friday of the month, October 7th, non-farm payrolls. Those will be movers. We've got some auto sales, ADP, trade, factory orders, our usual energies, initial claims, etc. So there'll be a number of things here that may be market moving. Now, from a earnings, it's a very slow week, unless, of course, you have Micron. I believe that's Darden, Monsanto, Stars, the alcohol Constellation Brands, Yum Brands. So some really big names, but on a relatively quiet week of earnings. Market thoughts, big swings, no direction. OPEC agreement to have deals saves market early in the week, yet there's no agreement. All they have is an agreement to have an agreement. We made it past September. I think it was down slightly, if I remember what I heard on Friday. Although October has had some historic corrections, it's one of the best performing months of the year. I'll show you data to support that. Fed speak last week could not stop the bulls, especially on Friday. News and election will dominate. We saw what happened after Hillary, in quotation marks, won the debate. The market appears tricky here as a melt-up in the cards, or perhaps is a time for a significant correction. Usual agenda. Charts of the week. Last week I took a bull and a bear. Now the bullish setup, I think, performed very well. This was SAH, Sonic Automotive. I bought it because it was breaking above the 200. Everything turned green up here. Mobile breakout from a squeeze and a kahuna, and it continued to run up. This was the my buy point, and you could see I took it out on Wednesday or Tuesday, depends, I guess on Tuesday, and I closed up a couple percent, and it still looks strong. And in fact, since I'm not going to be doing this next week, I'm not going to have a specific pick this week, and I'm kind of thinking that I'm just going to stay long Sonic as my choice for the week. Now my bearish setup, it was a great setup. It was a on the daily, it was a new PPS sell signal and a breakdown. It was a low close doji on the weekly and a PPS sell signal. It was falling volume, and then what happened? It took out my target. I went short, and then of course OPEC came in with their agreement. Oil rallied. You should have closed it out at that time because you know where it's going. Now, reality is, if oil backs down, I'm going to reshort. I think RSPP is still a short opportunity, but with the put under the oil market by this agreement to have an agreement, I'll be out of it for now. Everybody should know about my Pug Users Group. We just had a great meeting. Sometime middle of the week, middle of the month, for those that attended, I'll be doing our update meeting. All right. So at this point, I like to usually go into TradeStation. See how long I hold up. And I just opened up a few things. So this is my sort of my market determinant. And one thing that I've added is we're now going to say there's 6 criteria that we look for. Is I've added my bongos here. As anybody that's listened to me knows, my secret weapon has been my weekly bongo keeps me in the market even when I have short-term corrections. And my weekly bongo matters. And so what I've now put on the bottom is one 3-set paint bar that has my daily bongo, my weekly bongo, and my monthly bongo. So let's go and look at the indexes. Start with the S&P 500. Hold on a second. So 5 things, now 6. Number 1, is it in a daily buy or sell? It's in a daily buy, weekly sell, monthly buy. Is the paint bar green, blue, or red? Green is an elder. It's an elder impulse indicator. Green means the buying window's open. I can buy or hold. Red means the selling window's open. I can sell or hold. Blue, it's a carte blanche. So it's green, blue, and green. So I'm okay there. The third thing I'm going to look at is where do I fall within the envelopes. When I get way below the envelope, I know I'm coming back in. When I'm way above the envelope, I'm coming back in. I also know that it's shown that it can ride up the envelope or on a down envelope for quite some time. Envelope's not an issue. That's 3. The fourth thing I look at is there any evidence of MACD divergence or convergence. We see the red dots on the price bars. What does that tell me? It tells me we have some evidence of a MACD divergence, and that we look down here, we've had a nice up move, and we've barely made a positive on the MACD. Now, I don't think it counts until I set a new high there, but MACD suggests less buying pressure, less participation. Then I look at my high jump bar. We're at 79, which is not a problem, so I could certainly, that's not going to keep me out of the market. And my weekly bongo's red, that's bothersome. So at least on this calculation, I look at this, and I'm not real bullish, but I'm not bearish either. I am on a daily and monthly buy signal. So I'm going to go neutral bull, slight bull on the S&P. On the Dow Jones Industrials, which is right in front of my face, we've got a buy, sell, buy, green, blue, green, no MACD divergence, no issue of the envelopes, 73.50 in a weekly bongo that's red. So again, the same thing. I'm not bearish, especially with the John Persons buy signals, but I'm not real bullish either, and it'll be a lukewarm bull like the S&P. NASDAQ should look stronger, and green, we got buy, and buy, green, blue, and green. No, we got some divergences occurring here, so we have set higher highs on this run than here, yet we've had lower highs on the MACD. That's why those red dots showed up. We're at 91%, so we're a little bit more extended, and our weekly bongo's green. So I feel better about the NASDAQ than I do about the S&P and the Dow, but there are some fleas here, especially that high jump's getting up there and that MACD divergence signal. And then lastly, if I look at the IWM as a measurement of the Russell 2000, I see, like the NASDAQ, we're on buys on all three time frames. We're green, blue, and green bars. We're within the envelopes. We don't have a current bar with a dot on it. My high jump is at 90, so that's high, and my bond goes green. So I don't feel bad about any of the markets from a bull-bear perspective. I feel stronger for the NASDAQ than the Russell, and then the S&P and the Dow bringing up the rear, but all of them leaning forward. Very quickly, healthcare is in a sell, weekly, daily, and weekly. Not much to say to like about healthcare right here. Biotech's been stinking up the joint. Oops, back up. That was healthcare. Yep. Financials. I don't know what happened here with TradeStation, but they act like there's no data on XLF. So I look at FAS instead, and FAS is in a sell signal in daily and weekly, although it's green bars, which means it might be getting ready to change. If I look at discretionary, it's green and green, but it's a daily buy, weekly sell, monthly buy, NASDAQ and Amazon and others. If I look at technology, that's been a leader in the market, and it's a sell weekly, but with a blue bar, green daily and weekly. If I look at industrials, again, green buy, green here, but on a sell. Industrials look good. Industrials and discretionary. Staples, no. Materials, in a buy, short term with a green bar, still in a weekly sell. They look good. Utilities probably don't look good, and you can see they're selling off, although weekly they did reverse. Energy, with the bounce, you can see what happens, even going up to the upper envelope. Energy looks strong. And so as I showed you on my PowerPoint, the strength in this market is going to be in materials and a little bit of industrials and energy. All right. Now let's go back into HGSI and let's do our top-down review. Oh, this is going to be interesting. I forgot to make the video resolution-less, so we'll see what happens. It may be okay. If not, it is what it is. I'm not redoing this today. Let's go into all securities. Let's go down actually to Woodward and Brown groups. Let's go into major market indexes. Let's go top down. And let's go to the S&P 500. Take a quick look at it. As we talked about before, the weekly bond goes red. There's been no Hindenburg. I'm struggling at the 50. Not bad. I mean, it looks like it's going to break one way or the other. I mean, we sort of got a wedge forming, which looking for a breakout again, one way or the other on this. That's not bullish, but like I said, it's not that bearish either. And it's been a crazy week of up and down. I'd like to see it get above the 50 before I hang my hat on being bullish. If I look at the Dow Jones Industrials, very similar. Kind of, again, wedging here. Expect it to break above or below. The weekly bond goes red, which is bearish, but when I look at the pattern, I'm mixed on my opinion. I look at the NASDAQ. And you see one sitting above its moving averages. This one looks quite bullish, had pocket pivots last week. The weekly bond goes red. And then the other that had strength was the Russell 2000. And you can see it's sitting above its 17-day moving average with a green bongo. If I want to go look at others, I look at the dollar, which we know is struggling to get above its moving averages. I can look at the VIX, which had a quick blip and back last week. Run up and right back down, sitting kind of where it usually bounces from, but it can stay here for quite some time. A rising VIX would be bad for your positions. Dollar's weak. What's gold doing? Gold's not responding to the weaker dollar. Maybe fears coming out of the market. I don't know. Probably fear came out after that debate. And silver tried to rally and it failed as well. So if there's strength, it's in small stocks. It's in technology stocks. Big stocks look like they're lumbering. Dollar's weak. VIX is low. And gold and silver are low as well. Next thing I like to look at is switch to my 07, which is my industry groups. And I'm going to go down and look at what's working right now, 2-day up. And again, oil, this is all about energy, and it's all about OPEC. You have exploration production, gas services, semiconductors, then you got products, banks, integrated oils, electrical power equipment, specialty pharma, and infrastructure support. Look at a couple of these. This is the oil exploration group. Everything is green on this one. This is Encana, nice little uptrend. Broke out last week, a couple of kahunas. Looks like it wants to go higher. Earnings sort of suck, pays a 0.6% dividend. Hess, in a pullback at the 50 with some kahunas. Green bongo buy, don't like the fundamentals, pays a 1.9% dividend, even though it doesn't seem to have any earnings, which is interesting. Whiting Petroleum, cheap stock. Looks like it broke up above the 200-day moving average. This is at the top every week, although it doesn't look like much because it's been beaten down so bad. And then there's the index. Some of them that I liked in addition, Devon Energy is one that I'm holding. Pulled back to the 50, had kahunas. Everything is green, took off. Another one that I like is Marathon. Also have a position in this one where it's breaking up above the 200. Never really had much of a correction this time. So that's exploration and production. You should have something of this in your portfolio. Services, I think last week, a webinar I did for the attendees that I sent out, I gave an example of a stock that I was buying. This was a couple nights ago, and I said I was going to buy Halliburton, and I showed an option position. Halliburton broke out on Thursday and Friday. Pocket pivots, kahunas, everything is green. I remain liking Halliburton. Helmerich & Payne also breaking out. Superior Energy Services, everything has about the same pattern, even rig. And then Schlumberger was my other choice. I took Halliburton because where this is below the 50, which might provide some resistance, Halliburton is sitting above its 50-day moving average. And I go through the top 10 groups. Third group down is semiconductors, change the index group. First two are tied up in transaction discussions, NXP and Qualcomm. And you could see what happened on rumors. NXP, I don't know where to chase it. Here's Qualcomm, also up on those rumors. NVIDIA, this is a beautiful stock to be in. Probably okay to get on it again. It's got great earnings per share growth. Clearly a leader in this market. Obviously, you like to have pullback to get in. Speaking of pullbacks to get in, I'm not a giant AMD processor fan. Lots of demand in this stock. It's at a good buy point. All I need is momentum. So it's on my watch list for next week. Skyworks, been in a downtrend forever. Seems to have changed its spots. The weekly bongo is green, and it's above its moving averages. And I usually just go down the top 10. I'm going to do one more, which is household products. And Procter & Gamble, talk about another leader. Lower left, upper right, nice moving chart. Kind of a nice to be in as well. Everything is green, have pocket pivots and kahunas. Obviously expensive. PE is much higher than its growth rate, pays a 3% dividend. If you have to be in something and you think the market's going to correct, this is sometimes a good group. In the essence of time, I'm not going to spend a lot more time on this analysis. 2-day force to the negative. Let's just go down here and see how many groups are down. Only group that was down was precious metals, and to the upside on Friday we had 68 to the upside. So definitely a positive day on Friday. Now, one thing I do like to do is show you some of the ones that I looked at this weekend and call out some of the highlights. So why don't we go through all of them very quickly, and then that'll be it for my analysis. Hopefully I'll have some of your favorites in here. I don't always put the momos in here, the momentum players, because often they're kind of not in good buy points. Applied Optoelectronics, this was a momentum player going sideways, had a pocket pivot and broke out on Friday, took out its PSAR. Ambarella, this has been a beautiful play, broken above the 200 here, touching the 200 here with kahunas. Weekly bongo's been green since it broke above the 50. In a nice uptrend, I think it goes higher. I am long. AMD, we already looked at. Array Biopharmaceuticals went up on some news, I think of some partnerships, pulled back in a flag, looks like it's breaking out of the flag on Friday. If this is a flag, you might get about 2/3 of the move here, which was about 4 points. So you could get another 3 points from the top, but I won't touch this until I'm convinced it's breaking out of the flag. Athena Health, this has been a strong name over the years. It's been in a downtrend. It broke above the 50. I found it because the weekly bongo took green, and I know this is a market leader. Atwood is coming off of a bottom, perhaps a retest of this low here, almost a retest. If it breaks above the 200 with the strength and energy, I might want to be long Atwood. Pays a 0.9% dividend, lots of demand. Bank of America, tough to be in the financials, but if I had to be one, probably this or JP Morgan. Pulled back to the 50, rallied at the end of the week with a pocket pivot in kahunas. Everything is green. Pays a small 1.9% dividend. Biogen, in the biotech space, this is the one that looked most interesting. We're in a pullback to support at the 50, pocket pivot in kahuna. The weekly bongo is green. If healthcare wakes up and biotech moves, this is one that you're buying at a discount. This is a stock that's been $400 or $500 stock in the past and is a leader on orphan drugs. Again, in the energy patch, I could have picked Chevron. I think I did. Here's BP, pays a 6.8% dividend. Breakout above its 50 with pocket pivots and kahunas. Weekly bongo is green. Central Garden and Pet, another momentum play that pulled back sharply to the 50, had a mobile breakout from a squeeze. I like to see some momentum come in, but this one looks like it wants to run. Conform Inc., CFMS, don't know anything about this stock. Healthcare device, kind of like my Sonic Automotive of last week, breaking above the 200-day moving average, having a kahuna. Everything is green up here. The Carlyle Group, asset managers pay a big dividend here at 16.2%. The stock since March has really gone nowhere. So you made 16%, or at least, let's see, it's 6.9. So you've made 8% on your money half the year. They make money. They have good earnings per share growth. This looks interesting here. Yes, I'd like to get it above the 50. I'd like to see the weekly bongo turn green. Did have a couple kahunas. I'll be watching that bongo. Chemical Financial, another bank, more of a regional bank, pulling back to the 50, just like Bank of America, a kahuna and a pocket pivot. Cotivity Holdings, COTV, technology play. Not a lot of shares traded, good earnings per share growth. Pull back, a breakout from here might be interesting. Airlines, seasonality, big time of year for airlines. Here's Copa, a South American one with some potential M&A opportunity. Pull back to the 17, need to see some momentum. Good earnings per share growth. Callon Petroleum, pulled back to the 50 and then broke out this week like everything else with pocket pivots and kahunas in the space. California Resources was sort of a bottom fishing play in energy. Had a kahuna, volume is picking up in the chart. Like to see it get above the 200. Note the weekly bongo has gone green. Cirrus Logic, another technology play, nice run up, pull back to the 50. Weekly bongo is green, give me some momentum. Chevron, like BP, broke above its 50, pocket pivots, and pays a 4.2% dividend. EBS, this is an interesting story. It's a pharma company whose, instead of raising debt when they need money, they get payments from the government. They develop defense drugs, among other drugs, and they work off of what's called BARDA grants. where it's a beautiful thing. The government gives private companies funding to develop drugs that the government then buys for defense purposes. This is a stock that had been a leader, fell from 44 almost in half. It's announced a number of new grants, a kahuna here, moving up off the 50. Again, and a weekly bongo turned green. If biotech takes off, this might be interesting. And Kana, we already looked at. A lot of the MLPs look the same. Very flat line with kahunas, pocket pivots, weekly bongo green. This one pays a 6% dividend. Eaton Vance, another asset manager, pays a 2.7% dividend. Pull back to the 50 with a kahuna. Looked like a good buy opportunity. Evolent Health, this is in the place of value-based payments. A newer consulting and technology company. Weekly bongo for some time at the 50 with a couple of kahunas. Easy Corp, I think these are pawn shops. Pull back to the 50, momentum took off. Faro, pull back to the 50, pocket pivots, kahunas, everything is green. I'm heavily weighted towards the beginning of the alphabet because I don't have that many more to go. I guess I got a few more. Fortinet. I think this application software, sideways, looks like it wants to run. Had a mobile breakup from a squeeze, weekly green, pocket pivot, and a kahuna. Greenbrier, they make and refurbish train coaches, among other things, just like Trinity and American Railcar. This thing's in a stealth bull market from 20 to 34 since January. That's a pretty big move. I think it's about 85% increase, or 70% increase. Had pocket pivot on Friday. Everything is green. It's certainly not extended. Gaslon, marine shipping. And it's done this before, so I take it with a grain of salt. Weekly bongo went green. Pocket pivots, had kahuna earlier in the week, pays a 3.8% dividend. Hawaiian Holdings, probably one of the better fundamentals of the U.S. airlines, all green up on the weekly bongo. Recent kahuna sitting above the 17-day. Halliburton we looked at. Helix is another energy services company, went sideways, broke above the 50, green bongo weekly this week. Not great earnings story. Harsco is a mining supply company at the 50. Give me some momentum. I like the bongo. Healthways. This is another leader in value-based healthcare. They've been a disease management company forever. That weekly bongo got us in here about the same time as I had a kahuna and went across the 50 with a PSAR reversal. Stock has doubled since then. It's gone sideways. Had a bunch of pocket pivots last week. This and Evolent Health are in good places from a fundamental perspective. Imperial Oil struggling with the 200, but went green on the bongos, 1.5% dividend. Infi, this is a technology semiconductor company, very loose but an uptrend with a number of pocket pivots and kahunas last week. Regional banking, if you want to buy banks but you don't know which one to buy, this is one that just pulled back to the 50 and had a kahuna on Friday. Kohl's, beaten up department store, broke above its moving averages out of a squeeze with a kahuna with a weekly bongo green this past week, pays a 4.6% dividend. Landstar Systems, a logistics services and trucking, I believe, transportation. In a short-term pullback, did have a pocket pivot. I don't know why I chose this one. I suspect it probably is going to be over here. And we'll get to my screener in a second. Just want to look at this because there has to be a reason why I picked this, and I think I know what it is. And the reason I picked Landstar was because it had a weekly high-close doji. Volume is heading up on daily and weekly, and this looked like a potential turnaround. Lucada National Bank, again, another bank pulled back to the 50 with some momentum coming in this week. Las Vegas Sands, interestingly, wind fell. Las Vegas Sands was up on Friday. Macau numbers out tonight. If Macau numbers are strong, gambling, this or win will probably do fine, or MPEL. Microchip, another technology stock in a nice uptrend. Mag Media General, great fundamentals, great earnings, breaking out after a squeeze with pocket pivots and kahunas. Mentor Graphics, a Application Technology had a Bible gap up on Friday. You need to know Bible gap up rules to play. It's actually just filled the gap that was over here. MetLife Insurance above its moving averages. Kahuna, pocket pivot, everything green, 3.6% dividend. Merit Medical Systems, nice pullback to the 50 with a Kahuna, one of my favorite buy signals. Another MLP, MPLX, sideways movement, breaking above moving averages with a Kahuna, 6% dividend. Another technology play, very loose. Only reason why I liked it is it pulled back to support, had a mobile breakout, pocket pivot, and Kahuna. Great earnings per share growth. Maxim, another loose semiconductor stock, trying to retake its 50. Pocket pivots. This is a time of year for semiconductors. In fact, I'll show you something about that in a second. Just hopefully I remember. MaxiLinear, another semiconductor play, loose movement now at the 50, breaking off with a pocket pivot. I'd like to see a bongo weekly green. NVIDIA, a leader, another MLP, a little bit of an uptrend, multiple pocket pivots and kahunas, pays a 7% dividend. This is Plains Group Holdings, LP. Parsley Energy, another energy play, pulled back to the 50 and a bump up, still weekly bongo red. Procter & Gamble, talked about already. Here is a special scenario. Here's a stock, PennyMac, mortgage investment, pays a 12% dividend. Sort of flat, broke above its 50. Weekly bongos green. Big dividend. Another stock that if I did a stock of the week I would have considered is this one, PTC Therapeutics. Doesn't make money. I believe they make some drugs that might fall in the same class as Sarepta's drug. They had gotten turned down by the FDA and they dropped from the 60s down to the 8. They popped over the last couple of weeks. The weekly bongo frankly went green back here. Move above the 50 with a kahuna. What a great time to have bought it, but that would have been very risky. They announced some licensing agreements, which is very good for the company this week. And frankly, this one looks kind of interesting with a kahuna. Phil Van Usen, this showed up on a bunch of my buy scans. Breaking out of a new high base with a pocket pivot, kahuna, a mobile breakout from a squeeze, everything is green. Quanta Services, this is a infrastructure construction, breaking out, loose, but breaking out here nicely. Great earnings per share growth. Rice Energy, sitting on the 50, had a kahuna, weekly bongos green, another oil exploration play. Here's that Sonic Automotive. We bought it after this day. It continues to go up. I would stay long. The weekly bongo is high, is positive, and I would not give up that position. Semtech, another semiconductor. Are you noticing how many technology stocks made it in my top stock list? I don't think that's a shocker for a reason. Terex Corp, breakout today. Mobile breakout from a squeeze. I think there might be some M&A discussions here, so I might right-click, go to more info from the web. Let's look at FinViz and see what it says about Terex. It doesn't really say here. Thought I heard some MA stuff. Maybe it was something in the similar name. TK Shipping, another marine logistics company. Really a bottom fish. What caught my attention, pays a small dividend, and it did have a kahuna, weekly bongos green, coming out of a squeeze. And then another energy play, YPF, breaking above the 200 with pocket pivots, new weekly bongo green. So a lot of, and then Zag, another interesting stock. Every time there's a new iPhone or Apple product, this seems to pop. Good earnings per share coming in. A kahuna on Friday broke above the 200. Everything's green, mobile breakout from a squeeze. And then this is Zoetis, which makes healthcare, but I think on veterinary sciences. Move off the 50. Everything is green, pocket pivots and kahunas. So a pretty broad watch list, probably too broad, but those are the stocks I'm going to be following. Now I'm going to pause the tape for a second so I could do something in TradeStation, and then I'm going to show you how I follow them during the week. All right, hold on one second. All right, I'm going to try and show you this before my trade station dies on me. I just had another error signal come in. But basically, I'm going to take my buy list here, which is pretty exhaustive. I drop it into a trade station radar screen, and then I look for new signals. Now, these signals are pretty much all solid because the week has ended. And if I look at, for example, across the line of Chevron, I can tell here is a daily PPS up signal fired on the last bar, which would have been Friday. So a new buy signal on Friday. The weekly signal is a new buy signal as well. And this is interesting because the prior weekly was down. So I have a weekly reversal. And then if I look at monthly, I can see it's in a monthly uptrend. I can see where we are at $100.75 is resistance. So we've already broken above resistance, which is a negative. And I can watch this during the day to see if anything new pops up as a potential buy or sell signal. And I don't know if these are going to even work because my thing flew. Yeah, it's good. My trade station crapped out of me again. All right, on that note, I'm going to take that as a sign that I probably should stop. I'm sorry that I forgot to change the resolution. We'll see how the higher resolution comes out. Have a great week. I think it is a treacherous time in the market. Energy, materials, and technology are where it's at. Be careful.